Good afternoon, everybody. Welcome to your Wednesday Hump Day edition of the TraderMerlin Show. Boy, what a weird world we live in. I have seen so many things over the past 24 years that I've been actively involved in the financial markets. And I have to say that what happened in the last couple weeks with some of these heavily shorted stocks, it's top 5 craziest things I've seen in trading for 24 years. So that will be mainly the topic du jour today. You guys saw I put together some wonderful looking graphics here today. This short squeeze insanity. Yes, it is nothing short of insanity. That is really what it is. Richard says hedge funds are running scared today. No, they're not running scared at all. They're dead. Hedge funds are, if you are a short Gamestop as a hedge fund, you are insolvent today. The way that this thing moved. We'll talk about a bunch of these high-flying securities. Also talk about, there's actually, believe it or not, there's some extremely positive things for the companies themselves here with regards to these moves. But I want to put things into perspective a little bit. The reason I wasn't going to do the show today, but I received a bunch of text messages from friends that were actually in GameStop and in AMC, and some of them asking me what they should do, others, boasting about their gains, and all inside my head I'm thinking, someone is going to get so screwed on this. Right now it's the hedge funds. But what's going to happen here is some of these Robinhood guys, these little Robinhood traders who are jumping on, someone's bought that stock. Someone bought GameStop at $380 per share. $380 per share. I'll put it in perspective here in a minute. But that is going to be the topic du jour, is the short squeeze insanity. I know we talked about it a little bit yesterday, but I figure it might be fun to go a little bit more in depth and actually talk through some of the specific examples, because they're not all bad. Some of these short squeezes are justified, and some are not, I believe. I think some of these companies are absolute dogs and going to go the way of the dodo. Others, I think, have massive upside potential, and the short squeeze, I think, is a good thing to happen there. All right, let's see. Let's start off with a list of questions here. I know I brought this visual up, but I'm going to show you a few of the ones that I cherry-picked for today that came through. This was, Tom says, I bought GME yesterday at 130. What's your target? I have to start with this one. And Tom, please don't take this the wrong way. I am a proponent of tough love. And I know a lot of people might listen to this and think, well, you're so condescending, Merlin. Well, look, it's tough love. In hindsight, you bought this thing at $130 yesterday, and you're asking me what my target is. You should have your target in mind, at least tell me that. And the other thing is, I don't know what kind of narcotics you're on. Maybe you're freebasing crystal meth, maybe you're smoking weed, or you're just drunk off your butt right now. What the hell are you doing buying this thing at $130? You do realize that the highest price that GameStop has ever seen in its entire existence from the moment they did an IPO was $63. $63 was at their peak of business operations, the peak of sales, and that was in 2007 in December. Here we are hitting $380 per share. You don't think there's some disconnect? So my worry here, Tom, first off, you say, what was my target? I don't have a target. My target is actually $20. I think you're going to see this thing going way down, right? Way down. I don't see it going up anymore. Who's going to drive it up? Institutions who are looking at the valuations, the fundamentals of a company like GameStop are going, there's no way it deserves to be at this level. No way does it deserve to be at $100. So I think your action should be the second that bell rings tomorrow morning, or if you can get out right now in the after-hour session, get out at $335 and take a $200 profit and chalk it up to absolute luck. There's no skill here. This is just you were in the right place at the right time. You caught momentum. The dangerous part here is this could just as easily drop from right now it's at 335. Let me show you some current charts here. This could just as easily drop. What did I have up here? I got AMC. Let's look at GME. It's at 310 right now. 5 minutes ago, this thing was at 340. So it's already starting to fall fast. In all transparency, guys, I do own puts on GME. I bought puts today. I just said there's no way. I mean, look, it could go much higher, and thanks to Elon Musk, it could actually go to 1,000. I'll explain that here in just a second. But if you just look at the price chart here, let me put a line at 130, which I'm totally befuddled that you bought at 130. I would never buy something like this, but that's just the difference in style of trading. There is your daily chart of it. Okay, so there's your daily. I'll take some of my artwork off here. You guys see we had this absolutely colossal jump up in the price this morning, but you bought where that black horizontal line is. Does that not convey any sense of maybe chasing something? You know, you in hindsight, you could laugh at me because you made $200 extra per share today. I say you got absolutely blind luck on this one, and to me, this is going to come crashing down. Now, you guys heard me say that this is the highest this thing has been. Here's the monthly time frame of it. Let me get some of that volume off there. By the way, in a month, you got a 1.1 billion shares traded on GameStop. That's pretty awesome. Let's disable volume, and I want to zoom out just to show you the previous, what the all-time chart looks like. So let me make sure I have all of the data that's possible in history on this thing. We'll go 50 years because GameStop was not around 50 years ago. I think it started in 2002. So there you go. Right here, you guys have every piece of data that's ever happened for GameStop. And what I was pointing out here was this previous peak back in 2007. There you go. 63.77 was the all-time high, and that's under better market conditions. Back in 2005, 6, 7, everyone was using physical CDs. Amazon didn't have its foothold. You couldn't buy things much cheaper on Amazon, or certainly online was there, but not to the extent that it is today. GameStop is a dinosaur, and I think the price action that you see from 2013 through couple months ago reflects the fact that they are an aging dinosaur that is going to go away the dodo. If you look at the new PlayStation, they charge you $399 for the new PlayStation 5. And that does not have a drive. Why? Because their expectation is you're going to download all of your games. You can, however, pay $100 more, that's a 25% increase, to buy a PlayStation 5 that has a CD-ROM. Right away, that tells you they're trying to phase it out. Charging $100 extra to have physical possession, most people are going to go, you know what? Just give me digital. Just give me digital and I'll be fine with that. So, the chart of this and any expectation of this thing continuing up is, I guess, you're going way against the grain here. The only thing that will help is Elon Musk. So anyway, I think if you look at this and stop for a second to breathe and see where we are relative to where something was in the past, this price chart would reflect GameStop's price fair value if they, I don't know, cured cancer, solved world peace, maybe came out with a 100% foolproof COVID vaccine. Yeah, I understand a $347 price on it, but no way is that thing where it needs to be right now. So, I personally, in short, so what I am in the 180s. I paid a pretty expensive price for it. I didn't buy a bunch. I just got a couple of them, but I bought April. Yeah, I got the April strikes, so it was definitely out. I don't remember Saba. It was very expensive. These are probably the most expensive and inflated options I've ever bought. But it's okay. It was risk of capital. It's just, you look at these charts and things can go bad. Now, let me ask you this. Is this type of move good or bad for a company like GameStop? Now, my feelings are that GameStop in 3 to 5 years will probably cease to exist. It will be like Blockbuster, right? I mean, think about it. It's pretty much the same thing. Blockbuster was doing great because everyone was still going to the store and renting DVDs. But as soon as Netflix came out and started doing streaming services, Blockbuster kind of started to slide. And of course, there's only one Blockbuster left in the United States now. And where is it? It's an Airbnb up in Oregon. Now, GameStop, I don't know if it'll be an Airbnb down the road, but ultimately I see it the same demise. I see them slowly drifting away. If I know that I can walk into a GameStop, look at the price of Madden 2020, and I can get it 10% or 20% or 30% cheaper on Amazon and have it delivered tomorrow, I'm going to buy it on Amazon because I'm going to save that money. That's how I think. That's how I operate. And I think a lot of other people operate that same way. So GameStop certainly was on a demise. I heard that they actually went out and tried to get a $100 million loan so they could keep operations going. This is probably one of the best things that could ever happen. If you're an executive right now of GameStop, this obviously is your golden parachute. Like, I would be selling every single share that I own. If I was the CEO of GameStop or any executive employee, 100% of my holdings would be sold today. Get rid of it, all of it, because it's going to go back down to 20 or 30 bucks, and then over the next 3 to 5 years, it will disappear. But what's good about this is they were turned down for that $100 million loan. Keep in mind, that's a $100 million loan. The value of GameStop has jumped something like $30 billion, billion with a B, in just the past couple of weeks. I think it's actually more than that. So what's good for GameStop here is they have a bunch of debt. They can sell shares at $300 per share, sell, I don't know, 2, 3, 4, 500 million, maybe $1 billion worth of shares, pull all that out, pay off all of their debt, and now they're debt free. So what would happen here is instead of dragging GameStop down with all this debt and really impacting their earnings, making it negative, they don't have any debt anymore. All of a sudden, earnings start to look great. This could really be a nice thing for them over the next year or two, but I still think the sad reality is it's going to all go to streaming here. So this to me is the classic pump and dump. It's ultimately going to end very badly because as you see on this price chart, somebody bought it at the high today, which is exactly $380. I would love to see the t-shirt of that person down the road when he just puts a t-shirt on and says, I bought GameStop, I bought GME at $380. So real quick, I'm going to go through questions here because I asked you guys to do question marks, and I love it. It actually helps out so much. Noam said, did anyone short GME today? Here's an interesting thing. You couldn't short GME today, right? I tried on about 5 different accounts just as intraday day trades to short. None of them would allow me to short it. So you've removed this selling pressure that it normally is present in the marketplace, right? That is I don't believe it's an exchange decision. I believe that is a broker decision, and it's a risk management tool. I agree with them. They probably shouldn't allow it. Although shorting GameStop at $20 versus shorting at $380 is a completely different ballgame. I would probably say don't short GameStop at 20. How low is it going to go? At $380, I'm saying short the hell out of GameStop if you can. Unfortunately, the premiums are so elevated on these options. So you can't really short it unless you have some miracle broker. What else did I see here? Which puts did you buy on GME? I did the 180. So I'll let you know how that goes. There's one giant asterisk on this trade that makes me nervous, and I'll show you here in just a second. What else? Yes, Chris, I saw BB on the move too. I mean, I'm going to run through a whole list here in a minute of some of the other stocks that have just gone absolutely crazy. It is just bizarre to me what's moving out there. Now it says, how does price get up this far? Who is creating this price movement? You can't tell me it's the Robin Hooders. They buy fractional shares. Some do. There certainly are people who are buying physical shares, whole shares at Robinhood. Now, what's driving it? All right, this goes back to a viewer question, and I apologize because I know some of you know this stuff inside and out. I want to... Here, let me do this. There's 3 questions I had to get to today that I brought up. So one was this, bought GME shares yesterday at 130. What's your target? Again, my target is $20. Tom, sell it. Take your profit. Enjoy it. Be happy. Go party like a rock star because you made a killing on this thing. You got lucky, my friend. This doesn't happen too often. It's not going to continue here much longer. Second question was from Scott. He says, what's your take on GME craziness? I think I just covered that one. We've got Carol saying, my son is bugging me to buy AMC. Thoughts? Ay. Okay, I'll get to AMC in a second. And then this one from Keith, I think is important for everybody to understand the mechanics of what's going on. He says, I still don't get how you can sell something that you don't own. This might help explain, Naum, the whole, how it can move up so quickly. So, let's say, for example, I'm a broker, and I'm just making it up here. I've got merlintrade.com, right? I'm an online broker. It could be E-Trade, could be Ameritrade, Schwab, TradeStation. Doesn't make a difference. They all have thousands and thousands, if not millions of clients. And so let's say these are just 2 samples of customers in the marketplace right now. You've got this lady here. She's got 10,000 shares of Microsoft. She's just holding those in her account, right? Maybe it's long-term inheritance. Maybe she knows someone at Microsoft. Whatever the case is, when they open that account at TraderMerlin or merlintrade.com, they deposited those shares in their account, okay? And the same thing here's for the guy. He's got 1,000 shares of Intel. So let's say there's a trader out there who's also a client of TraderMerlin or merlintrade.com, and he says, hey, I think that these markets are going to go down. What happens is that trader borrows those shares from merlintrade.com. Now, that trader doesn't care where they came from. Just basically what they're doing is they're selling those shares first. They're borrowing from Merlin Trade, selling them to somebody else in the marketplace. Now, those 1,000 shares, it could be this lady's shares over here. Who knows? It's one of the clients of Merlin Trade. One of those clients, 1,000 shares of Microsoft, was just lent out. You actually, I believe it's called agency order with subscriber commission added is the technical term for it in your contract. I believe that's what it's called. And that essentially means that they can take your shares, loan them out to you, just like your bank of America account, your Wells Fargo, your Chase, they loan out your money without you knowing, but anytime you walk into that branch, your cash it's right there. You can get it right away. So they're lending all this out. It's like fractional reserve banking. It's fractional reserve lending on the part of brokerage firms. So this individual borrows those shares from the bank. They have to pay them back. At some point, that arrow will go the other way, and that trader returns those shares to Merlin Trade, and the account holder originally that the shares were borrowed from is none the wiser. So, Nolan's question is, how does price go up this far? Something was irregular with GameStop, and bravo to the guys on the Wall Street Bets, and it's not just Wall Street Bets, there's a lot of other groups out there that were talking about how heavy the short interest was. You have a thing called float. Float means how many shares are in the marketplace right now available for everybody. And let's just say it's 100 million. That means there's 100 million shares for people to buy and sell. If I said that there was a 50% short interest, that means that out of those 100 million shares, 50 million of those were presently short. That's an incredibly high amount. GameStop was at 138. I don't know. I know your next question is, how can that be? How can you have more shares short than are actually available? I don't know. To me, that's something that the SEC and regulators should look into, but that's neither here nor there. My guess is it's some special deal that Citron Research and Melvin Capital did with different brokerage firms to get more shares to go short and push this security down. Regardless, these guys, it was so heavily shorted that what happens is, let's say you felt the GameStop was going to go from $5 to $20 and you start buying it. At a certain point, you have 138% more. So let me see what the float for GameStop is. I don't have it off the top of my head, so I apologize. I should be more prepared. I know. Got a lot of things going on in my world, guys. Let's go look at GameStop. So bear with me as I bring this one up here, and I'll share it for the viewer so you can see this. It's something that you might want to look at in the future as well is, how many shares are available, etc. So here is your Yahoo Finance. I will scroll down here, and we'll go to statistics. And you can see right here, there's an item that says float. There's 46 million shares available of GameStop. Now, you notice there's another one that's outstanding shares. Those are maybe shares that are held by the company, okay? The float is what's actually out in circulation. The total number, and there may be what's called shelved shares, which companies can keep on their books. Those are part of the outstanding. So there's 46.8 million shares float. You'll notice right here, oh, wow. See, I don't understand how this happened. Now, it jumped from 138 to short percent of float was 260%. So what you had here was a situation where there was 2.5 times more people short the stock than there were long. Remember, that the person who borrowed those shares to short has to buy. So all of a sudden now you flip the equation, you spike price like happened in some of these short stocks, they're heavily shorted stocks, and all of a sudden these firms who were short or individuals who were short have to cover. It may be because they received a margin call because the position went against them so badly that they were forced by their broker to close out the position. Also, the broker, when you borrow those shares, reserves the right at any moment to go, you know what? I want those shares back, and they can pull them out of your account, force you to close the trade, and that's probably what's happening right now. Not to mention the huge amount of people who are jumping on this bandwagon. It's basically like this giant sled, and especially Robinhood traders, the retail guys, they're just jumping on it. And again, my worry is that some retail trader is going to get stuck holding that bag at 380 because I assure you these institutions are going, whoa, we are not buying GameStop at $380. If there was a firm out there that had an employee buying GameStop at $380 on purpose with the objective of going higher, I would fire those people. There's no way that the numbers are sustainable on that. So now that's how it happens. You have the perfect storm. You've got a little brewing of knowledge that this security is so heavily short that any little movement up could create a short squeeze. As soon as that short squeeze starts moving and people are forcing to buy those shares to cover, momentum picks up. When momentum picks up, it's picked up on CNBC, Fox, and Bloomberg as being up 80% of the day. And what happens? Robinhood traders are like, bah! They're a little sheeple, and they buy, and they jump on this even further. And it continues to push. What happens? It triggers more short covering. And that squeeze, this is like the mother of all squeezes that I've ever seen. But it's not just them. I gave you guys a list. Real quick, let me run through here. Holy cow. I gave you guys a list yesterday or 2 days ago where I was basically saying, here's the list of companies that are the most heavily shorted stocks at the moment. And I'm going to bring them up. I actually put them onto a watch list here just so I could keep track. These are some of them. Now, I added Nokia and BlackBerry. I mean, come on, people. BlackBerry? Jeez Louise. Did they make a phone anymore? BlackBerry's up 21%. Nokia? Really? No. Does anybody here have a Nokia or a BlackBerry? If you do, you need to get a new phone because it's like a decade old. There's no BlackBerry and Nokia phones, but hey, Nokia's at 47%. Apparently they're jumping back in the arena. This is stupidity in my mind. Anyway, you look at the list here. This is the list that I gave you guys yesterday. Every single one of those companies is up pretty big today. The worst performer, there were two. That was GoGo, which, let me bring up that. I don't even know that. It's just called GoGo Incorporated, was down 3.7%. You had SPWR, which is SunPower. They were down 4%. But these other guys, 12% up, 10%, 17%. And then you have AMC. Well, MU is a legit company. Mike, you're talking Micron? Yeah, Micron is a real deal, Mimi. That's not a short interest pump and dump. This is a legit dominant company out there that I would say is a very stable, giant behemoth of a company. These other ones I'm referencing, which I'll put them on a daily chart here, these are all heavily shorted. Yeah, so yeah, they had a pretty bad day, but not that big of a deal. Look at this one. Here's AMC, right? You're thinking AMC Entertainment went from $5 and change yesterday to $20 today. It says 226% gain as it stands right now. That's ridiculous. So to me, these types of moves, I mean, if you bought AMC, I would probably call you an idiot to your face. Like you're an idiot. What are you thinking? And just to put it into perspective, I know that restrictions are being lifted on movie theater or on just going out in general. I'm not sure which states you guys are all from, but certainly, yes, I know they pivoted away from phones, but it's just kind of humorous because it's BlackBerry. Come on. Anyway, Nokia, right? If you look at AMC, the theaters are opening up, which, okay, fine, in some states. I think California, we're still shut down here, so that's obviously going to be a problem. But if they did start to open up, where could that be? Where could it get to? Is it back to full capacity and those theaters are going to be wall to wall? Probably not. Well, look at the price valuation here. I'll bring this up on a weekly chart, and you have basically 2 years worth of losses, and it's been on a pretty substantial downtrend since even further back to 2017. Yeah, all the way back in 2015, it's just been selling off. So, you have this monster move up. Honestly, at this point, it looks like a more attractive short because I still don't see AMC getting back up to those peaks at $40 or $30, right? They're still suffering. If they do open, it's going to be at 25% capacity for a while. I know that's here in California. Some of you might have different restrictions, but here in California, you're pretty limited on what you can do, and theaters, I think, are still shut down. So, this is one where it came right back up on an overhead supply level, right around $20. But I think it was a lady asked me in the chat or in the email, which you can always email me questions, guys. You can just send them in at TraderMerlin.com. Where did I put it? So this is the one. My son is bugging me to buy AMC Thoughts. I would not buy AMC. I would just shy away from it. This is getting caught up in hysteria. That one candle should explain it all. That's a weekly candle, by the way. Okay? And yes, Luis says we're coming up to weekly resistance. And Jerry, I think you're actually looking at a good short right now. It's kind of like wait and see. The challenge here is two things. It may look like the perfect short. I'm be very skeptical on these ones right now because you are dealing with a fab that's going on right now, right? It's really, really building as we're speaking right now. I mean, it's becoming more and more popular every single day for the past 2 weeks. At some point, this will peak out and normal, calmer heads will prevail. It will revert back to its normal prices. Now, does that mean that AMC is going to be back at $2 in a couple weeks? I don't think so. But does it get back down to the $5, $7 range? Yeah, I think that's probably a logical price target for it. I think what's great about this is that it's giving these companies the ability to stay afloat longer because if I'm AMC, I can now sell some shares at $19 versus $2. What's an easier way to raise capital? To me, this is good for some of these companies out there. Now, I mentioned at the top of the program, in this short squeeze insanity, There are companies like GameStop, which I personally believe is going to go the way of the dodo in a few years. It will probably cease to exist. I think the other side of this is companies like AMC. They're not going to go the way of the dodo. I think movie theaters will always be around. They'll have to change their model. They'll probably have more spacious areas. And, it's going to be recliners and more space between everybody. They'll probably survive. But there's other companies out there that are victims of the short squeeze as well, who I think are the exact opposite business model. And that would be space exploration. You look at Virgin Galactic Holdings, SPCE. Let's bring up SPCE for a second. So here's space, and it's mooning as we speak. Is this a short squeeze? Yes, it is, because they had a very high short interest. The short interest was number 2 on the list, was at 81% for Virgin Galactic Holdings. I mean, that's obviously substantial short interest. The other side of this is their potential for upside movement could be good. You know what I mean? I think that there is the long-term potential for them if they do make it. If they end up being, space tours, well, then this has a potential to go much, 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 much higher. So I think when we look at this list of companies like, Bed Bath & Beyond. Really? Bed Bath & Beyond? I mean, how many pillows and throw rugs did they have to sell to jump from a $19 valuation to $53? This is insanity. And if you look at this is the weekly, guys. I'll zoom out further, right? Best Buy it actually just broke some of these highs it established back in 2016, but this reflects markets, this downward trend from 2014 all the way through 2020. That's 6 years that Bed Bath & Beyond slowly was sinking. Deservedly so. I would not buy anything at Best Buy or Bed Bath & Beyond. I can buy 100% of that stuff on Amazon, and I can buy it cheaper. I know I'm killing businesses, but I'm just not supporting Bed Bath & Beyond. I'm supporting Amazon because it delivered to my house. So yeah, I think some of these are way overbought. I think if you can short them and have the ability, you might want to start planning some shorts on some of these companies, but I'd be very careful because Elon Musk, let me see if I can bring up Elon Musk's Twitter handle, because if you guys saw what he said, let me see if I can bring up Elon Musk. I know I should all have this all prepared. He tweeted something today that I thought was really, really funny, and it was all about GameStop. Let's see. All of a sudden, where did he put it? I'll bring it over to your side and scroll through so you can watch it with me. But Elon Musk said something like, if GameStop gets to $1,000 per share, he's going to put the logo on his spaceship on the next mission up. And I was like, okay, Elon Musk does stuff like that. Then all of a sudden you have these, these I don't know, the Robinhood traders are just going to be like, oh, it's going to go to 1,000. Yeah. And he did. Somebody asked him, hey, Elon, you want to tweet about AMC for us? Because all he has to do is tweet about something and it just goes parabolic. But he posted something like that. It said if GameStop moves up to $1,000, he'd put the logo on his spaceship. And I thought, oh, God, great. Now you're basically going to push this thing to 1,000. So we'll see what all prevails. Bottom line is I think we are in a period of absolute hysteria, absolute insanity. I have seen this before. To be honest, I have seen this before. That was back in the late 90s when there was a lot of really heavy short interest on some of these technology companies and web companies. What was interesting is at least heavily shorting the web companies back in 98 was dangerous because that was a technology for the future. Shorting companies like AMC, GameStop, or so what was the other one? Bed Bath & Beyond. Those are kind of dying breeds. They're not revolutionizing the world as we know it with regards to retail. So, to me, those are the right ones to be short. It's just crazy to watch. I'm hoping that you guys, if you do get in there, that you are being very careful because to me that is a very, very dangerous place to be in that space. All right. It's not getting to Elon. It's not getting to 1,000. No way in hell. Hey, Jerry. I think the same thing. I mean, if it gets to $1,000, I might have to mortgage my home and buy some leaps on this thing, some long-term puts. I would go all in on that because GameStop, really? I mean, it doesn't make any sense. At some point, it will come back down, and hopefully, it'll do that before April when my puts expire. But I'm pretty sure we'll get that sell-off here in the next week or two as this all of a sudden fizzles out. It's crazy. $1,000 is the goal of the Reddit group by Friday. Hey man, I'll watch it tomorrow. I still, in my gut, tells me that it's dropping, especially when you look at the valuations. You look at any piece of fundamental data on GameStop. There's no way it deserves a valuation of $380 per share, especially if you get to $1,000 per share. And you have to understand. I mean, not understand, but you all understand this. is that when you have a situation like this, in the short term, fundamentals don't matter. In the short term, fundamentals are driven by immediate supply and demand. In the longer term, like if we look out 6 months or a year, the fundamentals are going to certainly have an impact on this one. And institutions, I can assure you, are not buying GameStop at $380 per share. If anything, they're unloading their positions right now. And if the institutions are going to be unloading because they look at the fundamentals and they can see there's no way these are substantiated, nor will they be substantiated even 5, 10, 15 years, then well, who's going to be buying that? It's those Robinhood traders. It's the retail people who are caught up in the hype. And the sad thing is, when you get caught up in the hype, your emotional bias is there. I had a good friend of mine was asking me about GME today. And he's boasting about how great he's done. I'm like, good for you, man. You got real lucky. And he wanted to buy some more and take it into today. And I told him, don't do it. And of course, it jumps up $200 per share. All right. Domesticated Rat. The Reddit group is called Wall Street Bets. Wall Street Bets is one of them, but there's a ton of them. There's a ton of these little groups out there. I mean, Wall Street Bets is getting the bulk of the attention, but there's a lot of them. And if you really wanted to, what you're basically looking at is this: they're creating an issue where I would argue that they are manipulating the markets, but they're not doing anything illegal. And this is the issue. We had a halt on some of these stocks this morning. The SEC is talking about how they're potentially going to start halting more and trying to prevent this from happening. But all these groups are doing is bringing it to people's attention that, hey, this thing has 138% short interest. That is ridiculous. Any move up is going to cause this thing to spike, so let's buy some. And they buy it, and it pops it up. You could go out there and do that on any single given day. Now, is the SEC going to put an end to people like Wall Street Bets? I do not think that they can. It's simply people talking about markets. Who's guilty of creating fictitious, not fictitious, but since it's illegal to manipulate, who is more guilty of manipulating a security? Is it Citron Research, who's sitting out there doing nothing but issuing report after report after report saying how bad the company is and maybe even exaggerating some of these numbers or creating an impression? As I told you, fomenting is illegal in the financial markets from a trading perspective. They could be fomenting the impression that GameStop is dead in the water. Well, these buyers just bought shares. There's nothing against that. That's not a pump and dump. I think what happens with pump and dump is you're recruiting a lot more people, and that may be a red flag for the SEC. Jonathan says, how do you think all of this will affect the overall markets? I don't think it'll have a lasting impression. I think that the the lasting impact will be memory of heavily shorted shares. I mean, I saw a whole bunch of posts yesterday on how they said short sellers are idiots and you're stupid. Absolutely not. Short sellers serve a place in our market in pushing down overvalued companies, and all of a sudden we've got some very overvalued companies that deserve to go down. I don't think it will change anything. I think there might be some hedge fund restrictions. I think that you might see in the future that there's a specific short amount. They might restrict the amount of shares that a company can short. So let's say we had, in the case of GameStop, you had 48 million share float. Maybe the maximum that can ever be shorted is half that, right? Something like that. Putting restrictions on it to prevent these, because, man, I'll tell you what, with an orchestrated group with some chats and tweets and having a good group behind me, it's easy to do what happened with GameStop. What surprises me is the extent and why it's still continuing to move to the upside. I would love to see the financial statements of what's happening to people's accounts, because you've got a few Robinhood traders who are going to be making tens of thousands of dollars and chalk it up to intelligence, which it's not intelligence, guys. It's just there at the right place. There's no brain thought here. You just jumped on something that was moving. To the hedge fund side, I'm very curious to see what happens on the hedge fund side of things here, because I know that multiples are going to be blowing up. And what's dangerous about this is, you guys might remember last year there was a young kid who was trading options at Robinhood who ended up killing himself because of numbers he saw on his account. That may happen here as well, and I hope it doesn't, but when you have some young trader who put all of his money into a stock at 380 and all of a sudden that stock goes from 380 back down to 20 and they're using margin, they lost everything. And that's a danger to me. I think Robinhood should be doing more to protect their investors, although they're just letting them buy, right? Letting them buy GameStop and Space and all these ones. So, Why aren't these companies issuing new shares? Well, just why? Because if you issue new shares, you dilute the share price. So why not just sell current shares? I mean, most of you guys are Online Trading Academy graduates and your students have supply and demand. So from a fundamental perspective, if we look at the basic drivers of price, it's supply versus demand. Demand right now is off the charts because of retail buying, institutional short covering, and just people buying into the momentum. If I'm a corporation, if I'm any one of these names that I've mentioned, Gamestop, Virgin Galactic, AMC, Bed Bath & Beyond, I'm going to my board of directors and I'm saying, how many shares do we have in inventory here? I want to sell all of it at market because I know the GameStop's not going to be $380 in a month. There's no way. I will bet any amount of money, guys, that they will not be $380 in 30 days from now. No way. It'll be way lower than that. So if I'm a company, I can say, great, we will sell all of our shares right now at $300. And when we get back down to 20, we'll announce we're doing a share buyback. And we're going to do a share buyback at $20. Buy low, sell high. I mean, that's market timing 101. And all of these companies should be doing that right now. And just like I would do in planning someone's personal finances and helping them get ahead with their growing their wealth, I would say that when you pay off your debt with that money. So if GameStop sells all these shares at $300 a share, pay off all your debt 100%. Be 100% debt-free. All of a sudden, earnings per share start to spike. Then your company might actually have some longevity to it. But debt is a drain on these companies. So pay it off. You've got a golden ticket to pay off your debt right now. Daniel says, when I pissed off is I sold my call options on bed. Oh, man. Oh, Daniel, sorry about that one. Those call options would have netted you a very, very pretty penny. Alan, did I answer your question? I hope I answered your question there. I think issuing new shares would simply dilute it and it just defeats the purpose. I would sell what I already have because then it doesn't impact the supply. That'd be the easiest thing. Okay, so that was it for that piece. I think I had some other stuff too. Gosh, it was just such an exciting topic out there today. Let me see. Did that one. All right, what other questions do you guys have for me? No, issuing new shares is not the same as selling shares. You have to do a second. It depends on how the shares are stored. So if they're shelved, then it doesn't impact much. If you are doing a secondary offering, you're now diluting supply, right? So if they did a secondary offering of another, 48 million, well, now they're looking at 96 million shares, and all of a sudden the price would be halved. So, Koja, thank you very much. Yes, please hit that thumbs up button if you liked it. I think the overall gist from this today, guys, is don't get caught up in the hype. It's very dangerous, And yeah, you could have bought $130 GameStop yesterday and been looking at $380 today and been pointing the finger at me and said, Merlin, you were wrong, you were dumb. I will probably be right in the long run. I'm willing to bet any amount of money I'll be right in the long run that thing is not going to sustain 380. It's going to come crashing down. And I'm worried that people get caught with that. Amanus says, if no way it will last a month, you should buy long time puts right now. Yep. Yes, and that I didn't buy long time puts. I bought puts that are going to expire in April. So I think that you'll see a big spike down here in the next couple weeks on this one once people realize that this is just stupid and it shouldn't go up anymore. But yes, if you could find longer term, sure, go for it. The issue is the implied volatility. The implied volatility for AMC, for Space, for GameStop, Bed Bath & Beyond, it's the highest of any securities out there right now in the financial markets because there's just so much volatility and risk to it. So yes, I agree with you that you should be looking to buy some longer term puts here, but you have to pay a pretty penny for those. And that's that trade-off. Is like, okay, how much do I want to pay for that? And then I got to figure out what strike price I'm interested in. And that's certainly a difficult one to figure out, but hopefully you guys make the right choice. All right, guys, let's see what else. I said we'd never get over 30 when it was at 20. Well, from the fundamental numbers that I've heard a lot of analysts go over, they say that GameStop's valuation should be about $20-25. All right, so even if it was a growth stock, $50 would be expensive, and here we are at $330. My put spread on GME is ending in February, but I also have Nokia. Okay, hey, man, Alan, I'm not judging you. I'm just saying you got to know your risk, right? I mean, right now, I told my friend today, I said, it's like juggling chainsaws, right? And he's all excited because he's killing it. He's absolutely killing it. He says in the last year, he's up, 100+%. Great, good for you. This is one of those things when you get used to something being so easy, you just buy something that's rallying and you make a ton of money, you get caught up in it. And all of a sudden, you're the one who's holding it at 330 as it drops back down to 20. can't let that happen. You got to make sure you put some stop losses in place. And FX Green, you can tell he's a trader out there, or she's a trader. I don't know if it's male or female, but it says there will always be another opportunity in life. Yes, and there will always be an opportunity like this. Maybe not the extent where you see such a parabolic move in just a couple of weeks, but there's always opportunities out there. And as you know, some of the colleagues that come on this program like to say, I'd rather make a fast nickel than a slow dime, and I agree with that. I think you can look at it from two different perspectives. I can take the long-term route, which actually I think is better if you look at the big picture. If I'm going to go short-term, though, I can't be too greedy. I got to take the little pieces that are given to me, and I think right now people are getting very, very greedy. What EA is saying to you and how far equity is going to fall. All right, let's take a step back before I get to the economic calendar. We'll look at the overall markets today. Not just the equity markets, but cryptocurrency taking a drubbing here recently. We down at 30,000 on Bitcoin. That's a drop of about 3.3%. And we're actually much lower than that here just a minute ago. Let me go to the daily here so you can see. I'm going to start with Bitcoin just because, to me, this is the logical stopping point for it. It was about 29,000 on Bitcoin, and we bounced off that one today. So I'm really curious to see if we hold this one before we start rallying up. Close that gap, and it's kind of basing a couple times there, so we'll see. But that was down 3.3%. Big news is actually coming out of the tech stocks. And you look at this gigantic engulfing candle that formed today on the NASDAQ 100. NASDAQ was down 3.14%. Look, while it's an ugly day, it still doesn't it doesn't say sell, right? The NASDAQ is still on this big overall uptrend. So while it's painful for anybody who's holding long right now, it's only 3.14%. Not that big a deal. Now, what we do have is this, before I get to the other markets. Let me bring up Facebook and bring this to a 5-minute time frame, because we talked about this on yesterday's program on how we have this thing called the popcorn trade of the day with my nice dramatic graphics out there. That popcorn trade of the day brings you to Facebook. They came out with earnings today. I'll have the earnings here in just a second so I can bring that up for you. But they had a huge swing down. This is the 5-minute time frame, guys. So you can see right where my cursor is. That's when they came out with earnings. Dropped all the way down to sub 255. Now it's back up to 274. And there was a lot of negative spin about Facebook's earnings. But there's Facebook on the earnings announcement. You also had Microsoft, but that was last night. All right, let's go to Microsoft. It's not going to let me go back that far. One sec. You have Apple. All right. There's your Apple. So Apple really volatile in the after-hour session. We went from 143 down to 137, back up to 143, and now it looks like that trend is going to be to the south side here. So starting to drift down in Apple. And then you had Tesla, one that I was definitely bearish on, had a pretty aggressive sell-off from 870 down to right around 800. So a $70 drop, right around 8%, but it's bouncing back up now to 344. What makes this noteworthy is these are all happening after hours, and these are all the pretty big tech names. Remember, Tesla is 1% of the S&P 500, so certainly this is going to have a nice pull down on the S&P 500. We'll see how the follow-through is, but at a certain point, people will freak out a little bit on this Tesla and start to take some profit, which should happen. We talked about this pattern form right here, which I actually really like on Tesla. And that's this bullish flag formation. Some would call it a pennant formation, but I'll do my artwork here. And I'm on snap mode, so it makes it more challenging. Let me turn that off. Here is your your pennant formation. We talked about this one being a pretty positive bullish sign for the upside, and all of a sudden it did. It broke through the all-time highs. That could be what's called a bull trap, and all of a sudden it just starts drifting down. So I'm curious to see what happens to Tesla tomorrow. It's already down here around the 844, which would put us at the lower end of this range it has been in for the past couple of weeks. So curious to see if we can get below 800. I believe we were on the show 2 or 3, maybe last week or week before, saying that if Tesla gets below 800, I think you've got a big drop coming. And I think it's a much-deserved sell-off in Tesla coming up here just to take a big breather, which it needs to do. Otherwise, markets. You asked about the S&P. S&P looks the same to me as the NASDAQ 100. I think it's going to have a pretty big impact tomorrow because of Tesla. Obviously, it's a big weighting on it, but you also have the Apple shares going to weigh on that a little bit, and Facebook. If you go down to the trend, though, really, if we kept that trend right here, it's still moving to the upside and still looks fairly decent. Let's go to your analysis and all its moving averages. What's this? This should be the 20. Yeah, it's a 20 and the 50. You know, we just crossed below the 20 period moving average, which not that major of a deal. We just bounced off the 50. So in this case, I would probably be using my 50 period moving average as kind of a psychological level. You notice that that's right around 3,700. So if we close below 3,700, yeah, I think you've got a much more downside move, and I think at some point you're going to see this trend potentially reverse. I think what makes this market very jittery and skittish is what's happening with these short interest stocks, right? This short squeeze insanity. I think what it's doing, it is casting a lot of doubt on the structure and stability of the financial markets. I think a lot of people are kind of freaking out about it a little bit. You know, you hear them talk about regulation and shutting down all these stocks. That creates more uncertainty out there. So I think we've asked in the past, what is the piece that's going to bring this market down? Not that this is going to bring it down, you know, to the 666 on the S&P, but certainly giving people pause and saying, look, I'm going to take some profit off the table, and this thing will probably drift back down. I don't think it'll be too big of a down draw, but I do think you're due for a pullback. But tomorrow we'll break the 50 period moving average. Potentially, you know, it might break that tomorrow. If we get a close below the 50, then I think we've got some much more downside potential. What else do I got here? Melvin gave us all his billions as part of our story. Diamond Hands. Oh, Melvin. Yeah, poor Melvin. This guy wants to crawl under a rock and just disappear. Merlin, you could type 5 days and hit enter for 5 days data. It's the same thing as for the month or... Yeah, in TradeStation. I know. What it wasn't the day thing, was the scaling aspect, because I used the up arrow and down arrow on this, and I dragged. It messes up when you type in things. So anyway. All right, what else you guys got for me? I'm going to wrap it up. I think we're pretty much done. Let me go and show you your economic calendar for tomorrow, because there's economic and earnings calendar information that I think you need to pay attention to. This is what happened in today's market from the fundamental perspective. Your durable goods orders was much worse than expected. You see, it went from 1% to 0.2. Obviously, we want to see a positive number, which is good, but it was worse than expected, so that's not very good. You also had the FOMC statement, which completely got absorbed into the market. I don't even think the market paid attention to it because they're too busy watching GameStop. You also have later on tonight, actually in a couple of hours, retail sales numbers for Japan. So anybody trading the Nikkei or some Japanese yen products, be careful out there with that one. Earnings-wise, this is what happened today. There's your Apple. Apple and Facebook on lockstep on beating earnings. Everybody beat earnings except Boeing. No shocker there. Pretty substantial miss by Boeing. Actually missed it by 756%. I think you'd call that a big miss. Lam Research, they beat as well. So these are the companies that reported earnings today. Not all those charts reflecting happiness, though. Notice across the board, only two of them were up. Lam Research and Facebook was up slightly, but most of them are looking to the downside. Tomorrow's activity brings you a ton of announcements for the U.S. You've got advanced GDP, unemployment claims, good trade balance, preliminary wholesale inventories, new home sales, natural gas storage. It is a big day tomorrow with announcements for the U.S. If you move to Japan, unemployment rate, and also the Bank of Japan summary of opinions. You also have consumer confidence and then some GDP numbers coming out for the euro. So a pretty busy day for the rest of the world, including ourselves. Now, one of the... what's the ticker symbol on that, Joseph? Is it EXPS? I think it's EXPS if I remember correctly. Let me just check for you. This is the Raptor. This is the same one. No, this is Expanse. What's the ticker symbol for Express? It's one I don't trade, but I was looking at that stock today. It's in the same boat, right? It's got that short squeeze. Is Express a retailer of apparel? Do you think that's going to be the next great, amazing company? Probably not. I'm going to get my tech research here. It's EXPR. I always thought that was Expediter, so EXPR. So here is your Express stock. I mean, same thing. Right? This is another one of those short squeezes where all of a sudden they're pumping a stock. They're getting a big group of people to pop it, and that squeezes out short sellers, and all of a sudden you have a massive spike up. It went from $3 today to up almost $14. Similar thing. Just don't get caught in the hype, you know? What do I think of this company? Here's what I think of the company. Let me make this full screen. I'll scroll over here and say... Oops, I'm going to go to weekly, just so I get more time perspective in this bad boy. All right? This is what I'm looking at. What do I think? I think this company's done. I think they're in trouble, right? It's just a retailer that, you know, first off, their stores are closed. If not, they're open partial. But are they really warranting it to jump 186% today? No. I don't believe so. I mean, that's just my opinion. You know, I could be totally wrong. I certainly would not jump into this hype, right? You're the trend is your friend to the bend at the end. Now, this piece right here could be, again, just like with GameStop, could be great for them to sell shares, service a bunch of debt, and get themselves above water for a little bit. I mean, I probably think that Express would have longer lasting potential than GameStop. I think GameStop, the writing's on the wall. Oh, God, Bryson, that's a tough one. What's my expectation? My gut tells me this thing's going to come ripping down just because it's way overvalued, but we are dealing with an irrational moment in time. I mean, Alan Greenspan would probably say that the word irrational exuberance is too weak of a statement for this, what's happening right now. My gut tells me you based off normal market conditions, you should see this sell off. Given the hysteria and the amount of people who are watching the media headlines and see that AMC is up 182%, they're going to go out there right now and put in market orders on the open to buy this. And as soon as they get their $300, $600 stimulus check, they're going to pump it into this and buy AMC. So I think it still has upside potential because of the hysteria. From a logical perspective, short it if you can find it. Nothing makes sense in the equity markets these days. I agree with you, Jerry. I agree with you. And I hope that for some of my friends who are just killing it trading these stocks, they don't get caught, because you know what's going to happen. Somebody is absolutely going to get caught. Gregory says the only problem with GameStop is corporate leadership. We need a visionary leader. Well, they just got a new CEO, and I'm like, this guy's probably patting himself on the back thinking, they love me. It's like, no, brother, it's not you. It's how heavily shorted your shares are right now. Alex asked for AEO. Similar boat, American Eagle Outfitters. I mean, this, again, is one of those retail apparel companies. But if you look at this chart, does this one look sustainable? Much more so than Express, right? This has been building. Now, granted, it's gone from $7 to up over $25 in a very short period of time, but still it's building and building and building. It's not, this angle is unsustainable in my opinion, but it's certainly not something like Express, which is just nuts. EXPR. I mean, look at that. That's not building, that's hype. I feel like I should have sold AMC at $19. What do you think? Do you own shares? If you own shares, I would have unloaded every penny I had today. Absolutely. AMC, I'll look at this one tomorrow and see. Unfortunately, I just don't want to spend that much money on these puts, but the puts for AMC would be attractive to me, and also looking at something like GME. I was actually watching GME in the after-hour session, and it was still holding. It's still traversing sideways here. I actually expected it to start to drift down. We'll see. At a certain point, what happens is it gets hard for the retail trader, the millennial, if you will, with not a lot of money, to buy a $300 security. Well, they could jump all over a $20 one, but even with fractional shares. What's the major news for all the retail companies that have that big jump? Well, Coach, I think part of it is two things. Number one, I think it's that we're relaxing some of the restrictions for COVID, which is positive, but it's also they've been some of the most heavily shorted stocks. Retail stocks have been extremely heavily shorted. We've been talking about this since February of last year, which we were actually talking about this 2 years ago or more with John O'Donnell on Power Trading Radio saying, retailers, that whole model is going to change. You look at any mall, they're dead, right? They're now becoming Amazon shipping warehouses. So there was already short interest building. Retailers have been very heavily shorted. It's part of the short squeeze phenomenon. Chewy, that was where the CEO came from, right? Chewy. I love my dog, so I guess I gotta love Chewy. Let's see. .D. Okay, now this is better, right? You have something that has been trending up, and yes, it's accelerated too much in my opinion, but it looks like a decent growth, right? They're traversing. This isn't a pump and dump. This is not a short squeeze hype trade. This is a company that's just accelerating as it's been growing. So this is a normal chart. I think it's a bit extended, but you can't argue the uptrend. I'd have a little bit of a problem buying this thing at 103. If we drop back down to that 50-period moving average, which is your blue line here, 88.65, somewhere in there, $90, you do have an area right here, which looks pretty attractive to me. So there you go. What if I think of all these Reddit stocks? Do you think all these Reddit stocks will sell together, GME being the catalyst? Well, at some point they're going to sell, right? I mean, at some point, I know a lot of these people that I've talked to personally are doing day trading on it, which is good. I think it's safer to some extent by doing day trading, but who knows? Who knows what's going to happen? Nokia. Oh boy, now we're getting a whole bunch of stuff. Again, I don't think anything about Nokia. I used to own a Nokia phone. I'm not a fan of Nokia anymore. I just feel like money sitting in their stock for the past few years has just been a waste. You know, what's the news that came out, or is it just part of that short squeeze? I think this is also one of those companies that just all of a sudden everyone's out there looking for the short squeeze. I was going to show you this. You can actually do a really cool filter here. If you go out to Finvis, unfortunately, to really dive deep into it, you'd have to pay for subscription. But they have a thing here. It's called the Finvis Screener, which I love it, by the way. You can just go to fundamentals and, oops, I think it's descriptive. And you see right here it says float short. And you can change percentage. So unfortunately, I can't go to the custom one here because I would love to, you know, jump it up to 80%. But all of these companies here, this entire list, and it's 61 companies, all of these have a higher float interest than 30%. Now, 30% is not that bad, but there might be some opportunity in here. And you notice there's a lot of retailers. There's your Bed Bath & Beyond right there, Dillard's. I mean, there's going to be a lot of retailers in here. What else do I got here? Nokia to the moon? I don't think so. It would also have hedge funds. It's also having hedge funds to liquidate billions of dollars worth of stock, wrong? I'm not sure what you're asking there, Sava. I think that certainly the impacts on it will be the hedge funds unwinding their positions. Remember, most of these hedge funds are short these retail stocks, right? That's just kind of the way that they've been going. So by them having to cover the short positions, that's what's adding to this big pop-up. Reddit says there's currently 38 million short on AMC. Don't you think there is still a lot covering to go? Yes. Yep. Why would you short? Well, remember, there's when you look at, that's a great comment, GD. So if you look at AMC, if you look at the price chart that happened, and this is just a ridiculous price chart. GD says, Reddit says there's currently 38 million short on AMC. That's as of the last report, right? The short interest isn't updated daily. There's going to be a lag time there between you know how many shares are short and I don't know how long that lag time is. My guess is it's probably a lot less than 38 million right now as these guys are running for the exits here. What you're going to get in the next couple days is you will get margin calls being filled on this because remember yesterday it was trading 509 and today it's at 1990. Someone's getting margin called here for sure. So I would short it simply because the move that happened was so ridiculous and you're right at supply level going back into October or July of 2018. The only negative for me is that you're caught up in the short squeeze hype, which I think is still way too dangerous and too fresh. So if you are going to do it, that's why I like buying the puts because you have defined risk in the value of the put that you purchase, but the premiums you're going to pay are much, much higher. Blake says Nokia 5K going to make it skyrocket. All right. I don't know. I don't know the Nokia. I just know they've been just a dud for a long time. Here's your monthly of Nokia. You know, that's just wasted money for the past 10 years sitting sideways in Nokia. So we'll see. Who knows? Maybe they get back on track. All right, guys, that's going to do it for me. I gave you your economic calendar. I gave you earnings information for tomorrow. I didn't get earnings. Here's your earnings for tomorrow. It's credit card day tomorrow. Visa, MasterCard, Altria, Western Digital, and Mickey D's reporting earnings. 3 of those will be after market. That's going to be MasterCard, Altria, and McDonald's. Western Digital and Visa will be, excuse me, I had it backwards. Before market is MasterCard and Altria and McDonald's, and after market is Western Digital and Visa. All right, that's going to do it for me for today. If you look at tomorrow's guests, I'm pretty excited. We're going to have John Rowland on the program tomorrow. We'll be talking about, we're talking about trading pivots. I was speaking to him today. He's an old floor trader on the NYMEX trading energies, crude oil, and natural gas. So we'll be talking about trading floor pivots. I'm going to get his take on this stuff too, so you guys feel free to ask him any questions you have. If you do have questions for me, easiest thing for you to do is put them down below the video on YouTube. Of course, if you like today's show, I know we've got a lot of new people here. Click that subscribe button. You can also hit the thumbs up. That always helps me out. And you can email me anytime you like. TraderMerlin.com is the website, which I don't update very often, but it's TraderMerlin@gmail.com is the easiest way to send in questions, comments, feedback, and hopefully I'll get to all those questions. That's going to do it for me today, everybody. Thank you guys so much. Have a fantastic day. Be safe out there tomorrow. I'll see you then. Take care.